Thinking of spending money on your website? Then this video's for you. As a business accountant, my team and I spend all day long helping business owners on their journey. And one common thing we see and talk about a lot is when people want to invest in their website. Now, as digital age carries on, obviously there's a lot of money being invested in websites, everything from, small sort of front-facing shop fronts, which we're going to come and talk about why that's important in a minute, into something like a big web store. And the fees for those can be quite substantial. Now for tax, there are a few things going on there. There are a couple of ways of treating this, both in your bookkeeping and for tax. And in this video, I just wanted to give you an idea of both so you can see why the difference is important, and also from a practical point of view, how you deal with it in your bookkeeping if you're keeping your own records. So before we get into it, if you like these type of videos, make sure to click the subscribe button below so you get notified whenever we release more just like it. So website costs, how are they dealt with? Well, let's have a look at it first from kind of the bookkeeping and the accounting perspective, and then we'll touch on the tax at the end of it. So from a bookkeeping perspective, what the website costs when you go to spend it, from an accounting and a bookkeeping point of view, the question is, are they revenue or capital? Now, I don't want to get stuck in the terms, but they're the two key terms that people want to talk about. And the reason for that is that they're treated in two different ways. Now, if you create a website, so let's say you spend 15 grand on a web store, that's going to last a few years, it's going to perform a function, it's going to bring future revenues into the business. And as such, what happens is it's recognized as an asset. It's a thing your company owns that's going to generate this kind of money later on down the line. And as a result, what happens is when you put it into your books, you want to put it on what's known as your balance sheet. Now, I'm trying to avoid too many technical terms in this video, but there are going to be a few. But if you haven't come across a balance sheet, what it is, and there are other videos on the channel that explain this, is that it's a document. There's normally two kind of main documents in a company accounts, and it's the one that shows the sort of financial position of the business. So it shows what you owe and what you own. Normally the other way around, so you have like what you owe at the top and then kind of what you owe at the bottom, but sometimes the layouts are different. But if you imagine, you'd have things like your computer, money that's owed to you, that kind of stuff at the top, and then down below you'd have money you owe, so maybe money you owe to your suppliers, stuff like that will all go on there. And then at the bottom of this balance sheet, there's normally an amount of money that in theory, if you kind of got all that money in and sold all that stuff for what it's worth on paper and paid everyone off, that's the money that would be left to the shareholders if you kind of shut it down. Not always the case, and we spend our life translating that. But in that document, it shows, all those things. And your website would sit kind of at the top of there as the thing that your company owns that has value. And over time, it would be written off in small chunks because it would be seen to kind of go down with value. So if you imagine, the easiest way to think of it is if you bought like a van, you'd expect that van's only got a certain amount of life, and each year you'd lower the value and write money off, and that's how that works. So from an accounting point of view, that's what's going to happen. So generally in your books, if that is the case, you're going to create this asset code. So you might have one that's called website build and stick that cost, that £15,000 development cost, into that little area. Or you might even go, if you've got one that says plant and machinery, for reasons we'll come on to later, you might even put it in there. But if you do sort of lob it all in one pot, as it were, and you're working with an accountant, or even if you're doing it yourself, just make sure you put in like your description, website costs or something like that, so that it's really clear what that is, because there's nothing worse than having a massive load of expenditure and not knowing what it all is at a later date when you come around to do those accounts. So bear that in mind. Now, I suppose the big question is, should it go there? Well, if you think about it, if you're creating this thing that's going to last a few years and generate future money like that, how revenue and customs see it is they look at it as like a shop window. So if you imagine what you're doing by developing this website, spending that money, is you're creating the shop window itself. Now, if that's the case, it's an asset like we just described. It's going to go on that balance sheet in the most general of circumstances. Like all things in these videos, I'm going to talk about the most common general scenarios. Yes, there are certain types of expenditure and things like that might not come into this, but in general, that's what's going to happen. So if you create the shop window, it goes on as an asset. But if you're changing the shop window display, so you're paying, say, your web developer to change some pages around, or you're changing the images or updating products, or there's hosting costs, maintenance, these kind of things, then they're actually the other side. They're not an asset because they're gone, aren't they? Once you've spent it, yeah, okay, it's updated, but it's kind of a moment in time. They tend to go with all your other running costs, so like your accountancy costs, your phone, your car costs, those kind of stuff, in what's known as your profit and loss, the other document. And I think most people kind of would appreciate what a profit and loss report is. It's here's the money you add in, and here's all the places where you spent your money, and that's where your website costs for those kind of hosting and changing the display in the window are going to go. And that's how you deal with it in the bookkeeping. So you might have, on that side of it, you might have some lines for some expense lines for things like hosting, or website updates and stuff like that. So it's all easily identifiable. So that's kind of the bookkeeping and the accounting treatment. So how does it work for tax? Well, oddly, sort of spoiler alert, the answer at the moment is it would be the kind of same tax result. Now, but the reason it's important to understand that there are differences is already we're seeing there's a slight change in that tax result depending if you're a limited company or not and when you're making this expenditure. And it could at any point when they changed the different tax rates for the different rules mean that those costs are different. So let's talk about, if it goes on the balance sheet, that first one where you're spending the 15 grand, say, in development costs, it comes under a different set of rules called capital allowances. So you can't knock it off your profits in theory immediately because we've already said it's got a life. It's going to slowly give you all that value back. So the idea is that the rules then say, yep, we're going to give you tax relief slowly over its life. However, there's currently a rule that allows you to say, it's called annual investment allowance, it allows you to say, actually, you can have the whole cost in one go when you spend it. Now that has a limit. Each year it's quite high. For most small businesses, they're never going to hit it if you're a smaller level business. But that limit can change. It's changed lots over the years, and as a result, it's just worth knowing there is a limit, and it is a temporary rule that's been around for years, so it could change. But the minute, you're going to get 100% of your costs. That 15 grand that you spent would come straight off of your profits before they're taxed. You get the tax relief in that year that you spent it. And then the other way around, if you get those hosting costs and updates and changing the shop display, it's the same thing. They actually, because they're already in your profit and loss, they're already, when it says this is your taxable profit after all these costs, you've already got the tax relief. So you can see at the minute, there's not much of a difference. However, from the 1st of April 2021 to the 31st of March 23 currently, there's something called a super deduction for limited companies. So here's a good example. That's a capital allowance. So that's a rule that deals with the balance sheety type stuff, the asset type stuff. And that allows 130% deduction for qualifying stuff. Now, often website costs, bizarrely in development, often count as software, which then count as plant and machinery. You think diggers and the like, but websites count in that category as well. And if that's the case, quite often then, you'll get 130% tax relief instead of 100 as we move forward. And I think we've done other videos, or will have done by the time this has gone out, other videos on the super deduction itself. But just to give you an example there, what that means is that every pound you spend on that website build, you're saving 25p in tax. And that's only available if it is that kind of asset. So on that bigger bit of the cost, it's not available, and you'll get the normal rules on the hosting and the website, sort of maintenance and things like that, and the updates. So you can kind of see, even now, because they've added in a temporary relief, you can see there's different tax treatments for both. Now, if you're doing your own tax return, the reason that's important is there are different boxes. You want to deal with the boxes that say capital allowances and take it out of your profits in your normal sort of, let's say you're a self-employed individual, you might have some boxes for all your costs. You wouldn't put the website cost in most circumstances in there. And again, I'm going to caveat that because there are some circumstances where you might, and you're going to take them out and then you're going to put them in these capital allowance boxes using different sets of rules. And the detail of that is kind of outside the scope of this video, but I just wanted to highlight how the two are potentially treated. So there you go. So you've got your, if you're spending your big money on developing it, it's going to last a few years, think asset, think shop window. And if you're spending money updating it, changing the texts and spending money with web developers there, then actually that's generally going to be hitting your profit and losses as kind of an expense. And knowing that there is a slight tax treatment, although they're very much aligned at the moment. And finally, before you go, I did want to add one very small caveat, and that's if you're in the world where you're claiming what's known as research and development tax credits, R&D relief, do talk to your specialist about how to treat these costs, because there are instances, and this is one of those caveat ones that I was talking about, where actually you might treat it different because of how and what you're doing, and it could be better for you. So I'm going to say no more than that, other than speak to your R&D specialist. If you're claiming those, you'll already know the game with this, and it's worth chatting to them because it needs to be sort of separately dealt with. That's it. Hopefully you've enjoyed this, and if you do know somebody that needs to know this information, please do share it, like and subscribe, and we'll see you in the next one.